Hey everybody, I hope everyone is doing well and had a good day. In this video, I will review the Emini 5-minute chart for Monday, August 25th, 2025. We had a gap down going into the day, so let's look at the Globex chart. This is the 15-minute chart, and let's see what we had for information, context going into the day. Okay, so fairly tight bear channel. Overall, it's a bear channel. We're getting lower highs and lower lows. We know that you can think of a bear channel as a bull flag. So 75% of the time, you're going to get the bull breakout of a bear channel. Most of the time, you do not get acceleration in the direction of the channel. So channels usually evolve into trading ranges. Because of that, we may get a rally. If not right on the open, it looks like we're evolving into a trading range, and we may test some lower highs, whether that's here, maybe up here. But there are magnets above, and we're getting late in a channel. There are many bars in the channel, and generally speaking, the expectation is a bull breakout of a bear channel. But even if we didn't look at the Globex chart for context, we have plenty of information here on the RTH chart. The way I see it going into the day, there are a couple of ways to view the gap down as 3 legs down. 1, 2, 3, and 1, 2, 3 pushes down. And then you look to the left, we have this big rally on Friday. We're testing near the start of the channel where the breakout pulled back. So we're near support with 3 legs down. So this might be a better area to look to buy rather than selling. If you're selling, you're looking to sell after leg 3 legs down to support in what's probably a broad trading range. I'm going to try to talk about a collection of bars at a time rather than going bar by bar. Okay, so we have a tight trading range on the open. After the gap down, after 3 legs down, the expectation is a couple of legs sideways to up, and we're expecting a bull breakout anyway because of the bear channel on the Globex chart. And what is bar 6? We have a second reversal. Gap down, we tried to reverse above bar 1, that breakout failed. Now we have a second reversal, bar 6, a good signal bar for the bulls. The problem with bar 6 is it's a tight trading range on the open, and it's 2 legs up. 1, pull back, 2. So some traders, they might view this as a second leg trap at resistance. You've also got the breakout gap. If we use closes, the bar 74 close on Friday. And by the way, if I say yesterday and today's Monday, I'm referring to the prior trading day, which is Friday. So the gap down broke out below the low close 74, and that's a breakout gap. And so the expectation is there's probably sellers at that breakout gap and sellers at the moving average. And 7, we got close to the moving average. We tested the breakout gap, and we found resistance. Traders who buy bar 6, maybe buy a pullback, they're disappointed with the follow through, and they'll probably look to exit around break even. And I believe that's what's happening on bar 8. Around the close of bar 6, you have disappointed traders. Now we have 2 legs up, the second leg subdivided into 2 pushes, and we're testing resistance. So this is not an ideal place to be looking to buy. And so I think bar 9 is you have bulls who are disappointed, selling out of longs, and bears selling 2 legs up to resistance in tight trading range. Now bar 9 is a high 1 buy, but the signal bar is relatively big, and it's a weak signal bar. The reality is that there's probably more sellers above bar 9 And in situations like this in a trading range, I kind of think of it as greedy to try to sell above bar 9 because it's such a bad stop order buy that the market may not get there. And because of that, it might be better to sell the close of 9 and sell above 9 if you're given the chance. But in this case, you are not given the chance. Now the target is probably the low of bar 9. We've already got a push down on 7, another push down on 9. There's probably support below bar 9. That's the minimum target for the bears. And that's exactly where bar 11 went before it reversed. Now, 3 pushes down, but over 5 bars, the expectation is a correction, a couple of legs sideways to up, but because this wedge is comprised of only 5 bars, the correction may only be 2 or 3, maybe 4 bars. It's a very minor pattern, but probably sellers above 11. This is a micro channel, and 11 is a bad stop order buy. And what happened here? Some traders may view it as 2 legs sideways to up, so we rallied on 11, paused for 2 bars, tried to rally again on 14, or it's 4 attempts up, so we tried 4 times on 4 bars, 1, 2, 3, and 4. But the 4th attempt is high in this tight trading range. In the bear breakout, the wedge has now corrected, and it's probably going to get a second leg, but there's probably support in the lower third below bar 11. And also, I want to talk about bar 14 really quickly. Because bar 14 may have been 2 legs up, 1, pause, 2, this could be seen as a complex pullback. It's really a triangle, it's an inside pattern. But regardless of what you call it, the expectation is another leg down. So bar 14 is a reasonable stop order sell, but only for a scalp. And like I said, the target is the low of bar 11, and it looks like 1R, the bar just about gets you there. So that there's a couple of magnets there. And that's about where 15 tested, and then 16 reversed up in a big way. 16 after 4 legs down, low in the trading range, likely to get a second leg. 16, not ideal for buying the close. It's a big bar and it's forcing you to buy right below resistance, the moving average, and in the upper third of the range. But traders will buy a pullback of the bar. So we got a deep pullback of the bar. And 18 reversing up, the bulls getting their second piece. So the traders who were trapped down here, exiting on the pullback, providing fuel for the second leg up. 18, 19, now we have a couple of legs up. It might be a head and shoulders, top, left shoulder, head, right shoulder, or 2 legs up here, 1, pullback, 2, where the second leg has 2 pushes of its own, 1, pullback, 2. So it might be 2 legs up to the top of a range. But the problem is the bigger picture, this is support from over here. So we're still low in the broad range, but we're high in the tight range. So the traders, if they're selling here, they'll probably be quick to exit if their trade doesn't go their way. Because the reality is that the market can go higher. We could test magnets above. We could test yesterday's close, Friday's close. And then who knows, this could be the top of the range. This could be the top of the range. Maybe the high of Friday is the top of the range. We just don't know. And then more follow-through buying on 20. So 3-bar micro channel, second leg up likely. First reversal probably will be minor, so buyers below 20. And then 21, a third leg up. So 1, pullback, 2, pullback, 3. And it's nested. So we can see the 3 pushes here, but also here. 1, 2, 3. So not ideal for buying. But the bears also don't have much selling pressure on the way up. 22 is a weak reversal bar. Probably buyers below or by the close for a scalp. And then 23, a bull breakout bar, but now it's 3 legs up, and the third leg has now subdivided into 2 pushes. And so buying the close of 23 is not ideal. 3 pushes up, but a tight channel. The expectation is a minor reversal and then trend resumption. So we should test the high of 23 at some point, even if we have a minor reversal here first. Even though it's 3 pushes up, like I said, the expectation is a minor reversal and then test of the highs. Reversal and follow through 24, 25. Bear breakout after 3 pushes up. There may be a scalp for 1R of the breakout bar, 25, and that takes you to where traders were trapped in this area by bar 21. So the high of 20 is support, the moving average is support, and a measured move down of 25 is support. There are layers of support here. So the downside here might be limited. And then a couple of pushes down to 27, but fairly tight, probably sellers above 27. And then we triggered the buy above 27 and found sellers above. Now 28, it's a bear bar, but it's not a bear breakout bar. It's actually a bull breakout bar because it broke out above the high of the prior bar. It did not break out below the low of the prior bar. So it's a bear reversal bar, but it's actually a failed bull breakout. 28, 3 attempts down, 1, 2, and 3 truncated. It might be a truncated wedge on 28, testing support after a parabolic wedge or a tight channel with 3 pushes that was expected to get a minor reversal and then trend resumption. So 28 in this context might be a better buy the close bar. And then the market quickly it tested the target, the new high. Now at this point we have a tight channel as a breakout, then a pullback. And at this point the market is likely in a channel phase. And because of that, there are probably sellers at a new high. So buying here is not ideal. Buying pullbacks is better. And even the price action approach here, 29, 30, and 31, on a smaller time frame, it's a spike and channel. Spike, pullback, and channel. So sellers above, but buyers below. Looks like about a 6-bar micro channel, 32. Not a very good stop order buy, but rather than buying directly below the bar, traders may come in maybe at this high of bar 28, bad stop order, signal bar, or maybe the moving average. 33 came close, reversing back up. But then a second leg down, 34. 34, similar to 28, may be a buy the close bar. For the bears, it's forcing you to sell right at support, the moving average. It's 2 legs down, 1 pullback, 2. It's probably always long. It's a spike in channel, bull trend, even though it's minor. And the expectation is that there are buyers below, and we'll get back to the highs. So it might be better to buy 34, not a very good sell. 2 legs down in a bull channel. And then reversal up 35, probably sellers above though, upside limited. 37, you call it a high 3, high 1, 33, high 2, 35, high 3, 37, and it should be good enough for a stop order scalp. Deep pullback of the signal bar, but then the bulls got there. Now 39, kind of similar to 23, but even worse because now it's 3 legs up in a channel. And remember what I said at the beginning of the video. I said it about a bear channel. So this is a bull channel, and the expectation for bull channel is that it evolves into a trading range. So we'll probably come back and test the start of the channel, which is the low of 27. So sellers above expected, 3 legs up, expect a correction, maybe 10 bars and 2 legs sideways to down, and the low of 27 is a magnet. And what's happening on bar 39? 3 legs up in the direction of the bull channel. Not ideal for buying, but let's say you bought the close 39. And let's say you scaled in at the low of 39. So you buy the close 39, Your stop is maybe a measured move down or below 34. And you have an order to scale in at the low of 39. You're disappointed with your entry bar if you bought the close, and then now you have 2 bars against you, triggering your scale in entry. You have reversal and follow through, and a bad high 1. There are probably sellers above. Now, it's leg 3, and now if you're looking to buy here, you're looking to trade leg 3 for leg 4. Low probability, more likely we're going to fail and pull back deeper, maybe even reverse. Remember, we may have to go and test the 27 low, and because markets are fractal, the entire day has been a bull channel, and because of that, the entire channel can evolve into a trading range. So the low of bar 1 also may be a test magnet. And speaking of bar 1 only remains the high or the low of the day about 20% of the time. And when it does, it's usually a trend day, usually a trend from the open. In a day like this, it's probably a trading range day. Lots of trading range price action on the open. This does not look like a strong, relentless bull trend. And I mean, if we look at just the pullback depth, 21 to 23, using spike breaks, so the pullback of this leg, I got the 50% level drawn in purple, so this one pulled back about 80%. You don't get 80% pullbacks in strong trends. This one pulling back about 50 or 60%. So it's possible the market is finding a top, and we're also around bar 40. So it is possible that this is a midday reversal. Now I want to talk more about bar 39. You buy the close 39, scale in below 39, and you're disappointed. Now you might just take, let me back up. If you bought the close 39 and scaled in below 39, you're disappointed with what's happened. And rather than exit at your original entry, you may just take a break-even exit on the entire position if you can get it. The average entry, if you buy the close and scale in below the bar, is the midpoint between the 2 entries, which is this purple midpoint. And you can see where bar 42 tested. It tested the midpoint of the 2 entries, and we found sellers. And now we have a 3-bar micro channel for the bears after a spike in channel on what's probably a trading range day. Keep in mind the open of the day is usually a magnet on trading range days. And because the channel is likely to evolve into a trading range, we could easily get to the 27 low. So after 3 legs up, the expectation is a couple of legs sideways to down. There's too much risk to the downside to be long here. And I believe that's why we got the give up bar on 42. I believe that's the dynamic that's happening here. 43 is a bit of a surprise bar, vacuuming down to support. Not ideal for selling the close, although you probably can sell the close. It's always in short, and the bear breakout will probably get a second leg. But in a trading range, breakout gaps close, and big bars usually pull back anyway. So rather than sell the close 43, maybe you sell the breakout point. And which breakout point? Maybe the 34 low, or maybe the 41 or 42 low. And we immediately vacuumed back up to on bar 44 to this breakout gap. But it's a 4-bar, 5-bar bear micro channel. Even though it's a strong looking bull bar, it's an inside bar, and relative to the sell-off, it's much smaller. This might simply be a pullback. It's a first reversal attempt after a micro channel in leg 1. In good context, the structure is good. Wedge top, strong reversal down, second leg down likely. So 44, not ideal for buying. Second leg, there's too much risk of a second leg down here. 45 testing those other breakout gaps, getting bad follow through. So 44 did not get follow through. 45 is a low 1 short, reasonable for selling, because we're probably going to test at least the low close of 43, if not the low of 43. So there's a magnet the test target for the bears is here. Entry bar for the low one, not great, but also not good for the bulls. Not good for buying, so still always in short, okay to be short, not ideal to be long. Now another 3-bar micro channel, a bad double bottom, 47, sellers above, sell the close, and same with 48, it's a bad double bottom, probably sellers above, and we're probably going at least a little bit lower. So failed bull breakout, another reversal bar, 49, probably good for a stop order, sell for at least a scalp. The bulls don't have enough buying pressure to be looking to buy here. And then 40, 49, 50 test that target. Now there's not much buying pressure on the way down. We have an open gap. And the open of the day is a magnet. And it looks like we may have a midday reversal, so it's possible we get back down to the open, maybe even the low. Remember the low of the day stat. And then 51 tested the open of the day, and there's a big reaction there. So now we've got 3 legs down to support. We'll probably correct for a couple of legs, but this is a lot of selling, and it's going to take more. There needs to be a more significant trend line break by the bulls before looking to buy. So this entire breakout from the high to 51 may get its own second leg down. 52 strong enough for a second leg, but still likely a minor reversal. 53 testing resistance. Bad stop order by 48 trapped traders. So this is a resistance area. You can see the market turning down there. Another bad double bottom, 56, sellers above. 3 pushes down, but the buying pressure is weak. So probably sellers above. That makes 57 more of a sell to close bar, even though 57 is a bull breakout bar. Like I said, the channel down is tight. It's a couple of attempts to reverse. You can call it leg 2, 1, 2. But it's counter to the direction of the trend. And I say trend, it's a minor trend because overall it's a trading range. But like I said, the bulls have not done enough to be buying here. So 57, if you had to choose between buying the close 57, putting a stop below 56, and looking to take profits at a measure move up, or doing the opposite, selling the close 57, putting a stop, a measure move up, and looking to take profits at the low of 56, which would you choose? And to me, mathematically, it makes more sense to be looking to sell here. This still looks like a minor reversal, not like a good double bottom with a significant trendline break before it. Other traders, rather than selling close, will wait for the bear breakout bar, higher probability. Higher probability comes with worse risk reward. You can probably put your stop above 58, but now there's less profit remaining in the trade, and your stop is further away. But okay to sell here, not ideal for buying. Another bad bottom, 3 legs down, but a bad signal bar, 59, probably sellers above. And I'm going to speed it up here. The channel continuing, so relentless selling, really nothing to buy. Every buy signal is better to sell. The channel down is tight, the buying pressure is weak. There are open bear breakout gaps. You can see the reaction at the open of the day, but there was never enough for a major reversal. Eventually the market broke below it, and the support became resistance here. So now the market's in a bear channel, and as we approach the low of the day, it's getting more dangerous to look to sell. This looks like it may be getting close to the bottom of the range. It's also getting late in the day. I don't think it's ideal to take trades past bar 70 to 75, but that's just me. And we would end up getting this sell climax on bar 78, a big bear breakout bar, breaking out far below all the bars to the left. And it's a give up bar. This is basically an endless pullback. The bull's just getting trapped, looking to buy, getting trapped, and finally giving up on 78. 78 is a good profit-taking bar for the bears. Remember, big bars like 43 and 78 usually pause and pull back before getting follow-through. And in this dynamic, this is one of those situations where you get the channel first and then the spike. This might be a variation of a second leg trap, where this is the first leg and this is the second leg. And it's breaking below a channel line. And it's late in the day again, so not ideal for trading anyway. All right, that's going to be it for today's end of day review. Thanks everybody for watching, and I hope everyone has a good night.